Let's start with potentially bad news first. Oil exports through the Strait of Hormuz might not return to levels seen before the Iran war. No one's pricing in a prolonged conflict, sticky high oil prices, high inflation. Here's a look at U.S. distillate fuel inventories. This is where we are now. We haven't been this low since like 2002. So we're pretty much at rock bottom, and this could go even further, right? So US and Iran still without deal to end war after Trump says he's not in a hurry. What happened all last week? The market was really excited about a deal, right? Stringing the market along, still no deal. Now, the most powerful people on planet Earth are incentivized. The reason they keep coming out with this messaging is because they are fully incentivized to keep rates low, right? They keep trying to break out, but because they know what they're doing, they know how to move markets, they're keeping it flat. So we just have to watch interest rates. Now, obviously, it's a dangerous setup, right? With the high inflation, the high interest rates. And so how are people positioned? This is really important. This tells you a lot about what comes next. Short interest, only 3.8%, 2026. Almost everyone is bullish. 2008, short interest, 3.8%. So we are very, very, very crowded in the bullish trade. What happens after this in a dangerous environment like this? We get massive sell-offs and massive buying opportunities. So that is very possible. Now that's the bad news, right? The horrendous macro environment. The good news is we could get a blow-off top massive rally in crypto in the very short term because markets want to spend money. They want to buy Micron. They want to chase semiconductors. If we're late cycle in a liquidity boom, which again, behind the scenes they're manipulating, then crypto assets can absolutely skyrocket. This is Ethereum's quarterly returns. Ethereum has never had 3 quarters of red in its entire massive history. And so this would be the first quarter, Q2 2026, where we have a third red quarter. Very, very, very unlikely, which means we could get a massive boom. And of course, it's justified because there's massive adoption of these assets in totally undiscovered assets like Aster. 15 million, 50,000 traders have found their way to Aster. That's a competitor to Hyperliquid, backed by Binance. So huge adoption, weird market, potential massive pumps, but overall a dangerous setup.